today we're coming to you from the headquarters of Cardekho in Gurgaon. With me is the co-founder Amit. Thanks so much. Seeing you for the first time since the outbreak of the pandemic. A lot has changed.
You have changed.
Yeah, I mean, I wasn't talking about me. I was talking about you. You've got, Cardekho, pre-used car sales, the way they're doing. I believe you're going to double down on the financial side of the business. You're also going to be a shark. I won't talk about that. I know you'll need clearances. How has it been the last 2 years?
I think it's been just insane the way we've seen the company grow. I think there's a power of compounding. We have been growing for last 10 years 70% every year. And this year again we are going to do 70% plus growth. The idea is that, if you're able to compound yourself at that pace. So imagine what we built as a group in 15 years. We are building 70% of that in the next year, right? That's the power of compounding. And I think
So you have a rule of 72 in startups and expansion?
No, it's just coincidentally it's happening like that. I think we have been seeding new ideas every couple of years, be it insurance, be it finance, be it even used cars, new cars, right? We have been doing a lot of stuff around the ecosystem, and our journey has been always around the consumer. That what does he need, which we should build around. Or she, of course. What does the consumer need? And we build around that. So if, for example, if he buys a new car, he'll have to eventually sell it after 4 years. So let's build a service around that. If he'll need an insurance every year, let's build a service around that. He'll need a finance to buy the car. Let's build a platform around that, right? So we've been always building things around consumer, and that
servicing, maintenance.
So these are still white boxes which we'll fill as we move in the journey. We don't pick up too many things at the same time, and this servicing, battery replacement, tire replacement is something we want to do, but not now, because the idea is to management is limited. So you have to basically choose your bets and where your time can go. And everything if you try to pick up, we've tried that in 2017, trying to pick up all verticals together and not being able to do a good job on even one, right? So now we basically have a mantra that pick up couple of things every 2 years and let them bloom with management attention, because it requires a lot of management attention to grow in a large setup. Our setup is very large, so management time would mean my time, my direct time should go into that asset that we're trying to create. And reality is that the new assets never contribute large to begin with, and they grow over a period of 4-5 years to have a meaningful impact on your top line. But the point I'm trying to make is that if you have to grow 70% year over year, then you have to start seeding ideas 4 years back, because in the 4th, 5th year they start looking larger to contribute to that level of growth. And that's what we have been doing. The pandemic, since you asked what happened there, I think we basically learned how the digital journeys can be more fruitful in terms of people coming online. The car research was already online. We are seeing a lot more traction on bikes, especially if you see EVs are coming now. So we are seeing a huge action on EVs. Our searches of...
You are getting huge action?
Huge
Can
action.
you share with us how big?
So we have seen almost 6x surge on EV car searches on our platform.
Cars, not even the bikes.
I'm coming to bikes again. In bikes, now we are the country selling 50,000-60,000 bikes a month of e-bikes now.
But these are also B2B, right?
Meaning?
Meaning let's say a Zomato or a Swiggy or a Flipkart or an Amazon. They are the ones, the main buyers.
They include all, but I am talking about more consumer patterns. Yeah. On the bike side, we have seen from last year to now almost a 15x surge on just EV bikes on our platform. So the reality is that the whole EV thing is gonna grow significantly. I expect by next 2-3 years, you'll see 30% of bikes sold in this country will be EVs. It's that level of penetration happening, and India is getting ready for a new change.
Can I ask you this 15x surge for bikes and the 6x surge that you're seeing for cars? Is it still a big metro phenomenon?
Actually, really surprised. Our majority search in bikes are coming from smaller towns. So it's not like it's coming from metros. Metros would contribute only 30-40% of these searches in bikes. For cars, I would agree, top 20 towns would contribute majority of that. Look, bikes have a significant advantage that you can take the battery out and take it to your house and charge it. Unlike car, you'll have to charge, need a fast charger. So it's very infrastructure dependent. But for bikes, it's not infrastructure dependent, because you can have, like you charge a mobile at night, you can just plug it into a normal thing and it gets charged. The kilowatt of the battery is much lower, so obviously charging time is much lower. So from my perspective, bikes is going to take on first, and cars will be next. So I expect in 4 years around 15% cars sold would be EV versus bikes would have a much faster penetration.
So when you're following also this rule of compounding and wanting to not be everywhere, what's the focus now? Because I would imagine that the pre-sold cars and bike business will perhaps be in a more of an autopilot mode now.
So look, at the company we have basically doubled down on insurance. We are very focused on.
So NBFC licenses here, all of that is done.
I'll come to the finance part soon. In the insurance side, health and life are two products we are focusing heavily on. And almost like last year, same time, our premium that we would do on health and life would be 6% of our total portfolio. Last quarter when I checked, it was around 22% of our premium is through health and life now. So we are basically gaining massive share on health and life. Number of agents that work with us has almost doubled. A pandemic kind of helped in this business because many people started finding out alternative ways to earn money, and we got a huge amount of enrollment of agents. We have a huge base of.
But yours would be for motor insurance and
that's
life,
what I'm saying.
right?
So it's not
accidental.
So we started with motor. 100% was motor year and a half back. We introduced in the same channel. We have people in every. So we cover 93% of India's pin code for selling insurance. We have an agent sitting in 93% of pin codes, right? That's the amount of penetration we have done on InsuranceDekho. So when any need arises, same guy who buys motor will buy a private health insurance or a private life insurance or even government PSU insurance, right? So what we have done is that we have used the same channel, given them more products apart from motor.
So you get more out of one
Correct.
agent.
So there are two simple levers, increase distribution by having more agents and multiply them by more products. And that's how you basically, increase your hold in this insurance vertical. So that's key focus area, and keep on, increasing the distribution this year. This year we'll grow around 80%, 70% on insurance premium that we do as a company.
What is the AUM?
The AUM of insurance right now at the current run rate would be around 180, 190 crore a month of premium we do from our vertical InsuranceDekho.
Oh, so it's more than 10,000 crores.
180 crore a month of premium would be roughly around 2,400 crores, not 10,000.
Yeah. No, I was going by the last 2 years. Putting it together.
So I'm just talking about current run rates.
Okay.
Then you've got finance business, which we are super focused on. So we have got a platform for used cars. We control almost 13-14% of used car lending that happens through our platform in the market, right? So we basically do around 500 crore a month of used car loans through our platform. It's that large. So 6,000 crore of AUM is created by us for all the partner banks. And that's again a focus area. So we have now started to work on new car loan marketplace and bike marketplace. So one was used car, we have gained quite a massive share. Now we're getting into EV financing, bike financing and new car financing. So these are two more verticals that have been set up here on the financing side. More importantly, I think we have started to realize, we can build a completely digital lending solution for a cohort of customers, which is like the prime customers, and you don't need to do any paperwork. So Rupee as a platform basically has an NBFC, which is our own. So there are 26 banks on the platform, and one of the bank is us, and which is completely digital. So there's no, paper signing. Everything is e-signing, e-NACH, e-KYC. So we basically came up with this concept of, how about digital loans on the platform that we run. And that's something that is a core focus area for us to invest in from that perspective to increase our own lending book.
Okay. Can I ask you that will all of this stay under one umbrella, or would you be looking at demerging? Because from whatever you're telling me, I mean, insurance can easily be monetized and hived off. Even the the financial services business could be. Is that the ultimate plan?
Look, it's going to be contextual for each business. Like insurance is getting into a lot of health and life, and we are an auto tech company, perceived as auto tech.
Yeah.
While we have emerged as a house of many businesses, if you realize.
That's what I'm
right?
asking. Yeah.
So each one will basis the financial needs for expansion may hive off. So InsuranceDekho, definitely we are under a fundraise process on that.
How much are you raising?
So we are raising around 100 mil on InsuranceDekho.
In this winter season?
Yeah.
Huh? When will you close?
I'll let you know when it closes.
Existing investors, will you hive it off, or this is going to be?
No, this will be an asset which we are already investors as Girnar as a group, and new investors come in and take stake. That's how it will be.
Okay. And there have been certain draft guidelines. I didn't come really prepared for insurance questions, but I'm aware of it. The draft guidelines, which is also looking to cap expenses. commissions, reduced commissions as well for life, non-life, which is going to be seen as a positive for the platform play, like a policy bazaar, and I would imagine for you.
I think the IIDA chairman who has come in has come up with revolutionary ideas. I think what you saw in financial...
DMATs, you're going to have DMAT also for all policies very soon.
What you saw is, RBI did to financing, the whole landscape has changed. I think that's about to happen in insurance under the leadership. So I am very excited. Now insurers can try new products, and there was a huge process to get approved earlier.
Correct.
So I think the flexibility being given now by regulator is super helpful for the whole industry to expand. And I'm very, very bullish on the insurance side.
Are you going to be in M&A as well?
We are always open to that, and we always evaluate assets, and which I can't disclose ever on this show.
I remember pre-COVID I'd come here and we were sitting right here.
Yeah.
And you said that Cardekho will be a decacorn.
Yeah.
And it's going to be a decacorn, if I remember, in 7 years, is what you had said.
Yeah.
With a really big IPO.
Yeah.
When are you going to be decacorn? Are you revising the timelines? And when is the IPO?
I don't think I'm revising the timeline, because reality is that the compounding is happening for us. We were last valued at 1.2 billion. And I don't think valuation means anything to me, I'll be very frank. What I'm chasing is, building a fundamentally good, sustainable, profitable business. That's how I look at
Are you profitable?
In most of the lines of business that I spoke about, we are profitable.
Where are you not profitable?
In the used car space, we are not profitable, but rest everything we are either profitable or break even. So that's how I'm looking at it. And then now these assets are throwing back cash. New car is throwing back cash. Financing is throwing back cash. Insurance is almost break even. Used car is where we are investing. Southeast Asia is where we are investing.
Indonesia, Malaysia.
Yeah, so in Indonesia, Malaysia, Philippines, we started same business, right? And now that is run rating around $30 million of revenue. So we have started the used car finance marketplace there also. We are also a new car player in Indonesia. We are market leaders there, right? So whatever we have learned in India is also being replicated globally.
Right.
And that's how, and I think the power of compounding lies in creating these assets. So it's not necessary you have to go into a new line. You can also have geographic expansion and compound
But
yourself.
India is such a large market. I've never understood, I'm being really honest, why you ever went to Indonesia and Malaysia. But
So I think we are a house of founders, as I call our company.
yeah.
As a Cardekho group, it's a house of founders, and you'll find founder level talent and founder level empowerment to every single guy who's running the show. And when you build a house of founders, it's easy to expand geographically with a sense of ownership.
We've been hearing House of Brands. You have to give it a new one. House of Compounders, House of Founders.
Compounder nahi bhai. Founders.
I heard that. I'm giving you another one, since you're also into compounding.
So I think the compounding can only happen, my view is that if you invest in your people, give them empowerment and give them a sense of ownership.
So you're not a micromanager?
No, I am totally not a micromanager. In early stages, I obviously am there to help guide. And as the asset grows, the whole management, the founder starts creating the management. We have a different founder, Ankit Agarwal, for example, InsuranceDekho. In fact, today he's being awarded the 40 under 40 award as an entrepreneur. So that's what makes me proud. As a group, Cardekho group, we are able to create this level of talent. Namit is
and a lot of it from Jaipur.
And that too sitting in Jaipur, nothing like it.
That's because
I think people build businesses is what I feel. Invest yourself in people and right set of people, give them the right set of DNA. That's what my job is as a group founder. And I think we have successfully replicated many businesses and grown them to scale by following this strategy.
I don't know how many people know this. I should just tell them, because you're very modest, that Cardekho started from a garage in Jaipur by the two brothers who have the same birthday, but they're not twins. They used to photocopy, I remember, car models at the Auto Expo and then put it on the internet. And the Auto Expo is going to be back for the first time after COVID-19.
Before pandemic.
But they're saying it's not going to be a big success. You're not going to see the way it used to be. How many, whether it's the number of people, the kind of models, the auto companies. Why?
Look, I think that's manufacturer's perspective on how much they want to invest. So I won't comment on that, of course. We are definitely
There's no revenge shopping in for cars because there are no cars, there's supply chain problems.
Now it's easing up. The order book is down for bigger manufacturers already. So what used to be 6 months waiting is now come down to 30 days. So I can see ease up of supply chain, manufacturers.
But this has all been great for you. Because people can't get new cars, they're getting old cars. I want to come to that.
I'll come to that also. I think the new car and used car go hand in hand. It's never separated out. If new cars is doing well, used cars will do well, because for supply to get created for used, new cars have to be bought and the ones you're owning have to be sold, right? So they're quite linked at the hip, literally, because you upgrade a new car and you sell your older one, right? That's how it works. So I would never say that if new car is not selling, it's a good sign for used car market. What that changes is the used car prices get jacked up, not the supply numbers.
हुआ था ना? Did it happen last?
Yeah, it happened. A 10% prices increase. Now with normalization of new car supplies,
Again, it's down.
it's gonna come down, obviously, right? It's not yet down. The impacts are yet to be very visible. By next JFM, we'll start seeing that prices dropping a bit. Is what I feel. Correction will happen when things are in short supply. Obviously, the price goes up. Now coming to the piece on the used car side, so we basically have a model of classified where we list all the cars, dealer cars, our own cars, and we sell. Then we have a auction platform where we, like, you can call us home, we inspect your car at home. You can book an appointment online on our website or app, and we'll send an inspector to your place. And in the reverse, we'll auction that car, and we have thousands of dealer partners who will start bidding on your car. And whatever is the best price, a small commission we make, and then we pass on the price to you.
Correct.
So that is a model that we operate in. It's home convenience that we offer you, and best price basically that we get is what we offer you. So this model is, we are going to basically scale up significantly as we move into the next year, and we are very focused here. On the retail side, where we are selling our own cars, I think we've realized it's not the best use of capital right now, as I see it. The markets, the profit pools that I can create out there are not that visible. So we have shrunk the operation to a few centers and trying to get the unit economics to work. We are a very unit economics focused company. So we are revisiting our model on retail side and doubling down on auction.
So therefore, would that also mean your showroom, which I know you had one,
in Jaipur, yeah, that's still there.
That's still there. You're not going to expand it. You're not going to.
So
take
we are gonna basically make sure that one showroom is super profitable before we go to the next one. That's the
okay. So you're going to wait till the Jaipur one is super successful. So that's not on the anvil.
Yeah.
Okay. Now I want to talk to you a little bit about what the senior executive at Mercedes has said and created a huge furor that the luxury cars market in India is not doing well because Indians have started investing in equity markets, particularly SIPs.
Yeah.
What does that mean for your business? That's the luxury business.
Look, from our perspective, since we are a platform and we get queries across the segment, it doesn't impact us at all. And we never were selling cars ourselves, just to be clear, right? We are
a
marketplace. So I don't think it has any impact on our numbers or anything from that perspective at all, rather. And I'll be frank, when cars don't sell, we have a lot of role to play because we are a performance-based platform where people come searching for cars and they want to contact the dealer, right? So if there is lesser sales, we are more in demand.
Correct, yeah. Okay, so that will obviously always work better for you. And tell me one thing, any new trends that you're seeing? SUVs, of course, the new thing.
So I think SUV, clearly
yeah, like everybody wants more bigger, aspirational.
Entry level is looking flat still. And sub 4 meter SUV and SUV segment is exploding, right? And that's what we've seen. Average car value has increased, average loan value has increased. Like if you go 3-4 years back, average loan value would be 5-6 lakhs on new car. Now it is 7 lakhs, 8 lakhs, right? So the average auto size, because sub 4 meter SUV and upper are selling more now, and that segment expanded, automatically average loan value increased, average GMV that we do increased. That's a trend we're seeing. Electric is a clear trend.
A lot of mind space there,
lot of mind space there.
Who are the winners in EV? You tell us.
I think there's no one. Winner can't be decided today. It will be decided over a 5-year period or maybe 10-year period. There are so many people entering. BYD has just entered the market. BYD is globally the largest. They overtook Tesla recently on the sale, right? They have just entered the market. Then you've got Tata doing very well, and they have a first mover kind of advantage. Mahindra just launched their XUV 400. So I think there will be a mix created, and there will be early stage winners and then late stage entrants with good products. So you can have mixed changes. Right now there is not enough supply, not enough availability in terms of variety available. But it won't be the case if you go out 2 years out. Many OEMs will start launching their EV versions, and that's when I think the dynamics would come out more beautifully.
Are you going to have a separate EV vertical or something?
So, yeah, so in our own new car vertical, we have carved out the EV vertical separately, because we think as a management we'll have to focus separately on that, and there will be separate needs for these EV buyers that we need to fulfill as a platform. The reviews will have to look different, the comparisons will be different, the mind space that consumer requires to buy EV has a different challenge, range anxiety, how much can I travel, where are the charges in my city. We have got different questions to answer.
So that you already started solving for that?
Started solving for that, exactly. So if you go to our website, you'll be able to find where are the charging points across India now. So we are basically aggregating the whole data that an EV buyer would need to get the comfort that whether I should buy a EV in my city or not.
Amit, you talked to me about compounding. We've joked about, house of founders, house of compounders. But tell me something, when you talk about that, why did Cardekho take more than 10 years? And while you don't chase valuations, it took more than 10 years for you to build this and to be, whether it's mythical or not, to be a unicorn. Why did a Cars 24 or a Droom or a Spinny do it way faster?
I think I firstly don't compete with any of them.
Or did you show them the way?
No, it's not like that. I think, look, the valuations are temporary. Profit is and sustainability is permanent. And I think Dhanda hota hai, and I think we have built it with brick by brick, and we have not gone up like that. I won't be surprised if many of the unicorns that have reached that stage may come down unicorn, right? They may not be unicorns later on, right? So,
are you still a unicorn? Is there been any markdowns?
So there have been no zero markdown, and I don't expect a markdown because we have fundamentally never got overvalued, and fundamentally the company is compounding, as I explained. So if anything, I am expecting a up round only from the last round, right? Because
you're raising triple digits, you said.
Yeah, that's just for InsuranceDekho.
But that will impact the whole
of course, it will. But all I'm saying is, look, I am not a guy. मैं धंधा करने आया हूँ, basically सीधी बात करते हैं. मैं प्रॉफिट पूल्स के साथ खेलता हूँ. प्रॉफिट नहीं बनेगा और ये नहीं कि आज चाहिए प्रॉफिट, होते तो 4 साल में बने, बट देयर हैज़ टू बी क्लियर पाथ. एंड इफ इट इज़ नॉट वर्किंग आउट, आई स्टार्ट रीवैल्यूएटिंग व्हाट आर द लर्निंग्स from this and then reinvent myself and rise from ashes again on that business, right? So I think retail is one such business that we are reevaluating how will the profit pool come. And I personally think I have no, I won't shy away in saying I took 15 years and I'm proud of that because my foundation is strong, and to get to Deca or get to 100 bill also is possible with this strong foundation.
So that's still the game plan. But I also noticed, Amit, was recently you the Cardekho appointed Mr. Parthasathi, formerly the LIC, the board, independent director. That seems like a very getting IPO ready type move.
Yeah, we are getting ready for IPO. We'll be filing next year. So we are actually preparing for that. We have started to behave like a public company already.
What do you mean start behaving like a public company?
All the committees that are required. Look, we believe that we have gold standards of governance. And this is one company that I have run myself, and I can say there is no black spot in the company. आप कहीं से भी कुछ भी देख लो, it's like the cleanest standard we have maintained. And now we are basically, setting up everything ready for public retail confidence that, whatever are the things required, be it remuneration committees, so many committees get formed. We have started focusing on ESG heavily. I have personally, neutralized my carbon footprint. We have got a charter ready for next 6 years on what we're going to do till 2030 on ESG charter and be carbon neutral by 2050. So we have basically, picked up.
मतलब कार ट्रेड का परफॉर्मेंस देख के डरे नहीं हो या को देख करने के पब्लिक को समझ में नहीं आया?
I think कि एसेट अच्छा हो तो पब्लिक को अच्छा लगेगा.
तो प्रॉफिट के बाद जाओगे आईपीओ की?
प्रॉफिट के बाद जाऊंगा. ग्रुप लेवल प्रॉफिटेबिलिटी हो जाएगी नेक्स्ट ईयर. So before we are very close to profitability now. We are not very far off. So as a group, we are actually about to inch there to get into green zone.
But what you're saying, that means next financial year.
So next financial year will basically basis maybe JAS or OND results. We'll file the DRHP and then go live in maybe a Q3 or Q4. That's the plan internally we have thought of.
Too early to ask how much you want to raise? Too early? Or appointed bankers?
It's too early. Yeah.
Appointed bankers?
We are in conversation. They are not finalized.
So it's going to be, I can make out 2023 is going to be a big year.
It's going to be a big one.
So here's wishing you all the very best for it.
Thank you.
Thank you so much for giving us time.
Pleasure.